Do you know why 90% of investors buy at the top and sell at the bottom? Why can someone be brilliant in every other area of life, but turn into a complete fool when they step into financial markets? The answer doesn't lie in lack of knowledge or technical analysis skills. The truth is, your biggest enemy in investing is yourself. More specifically, it's FOMO psychology, fear of missing out. Listen, today I'm going to reveal the truth that 99% of investors don't know, why FOMO kills their investment accounts, and more importantly, how to escape this psychological trap. The story begins with a shocking number. Dalbar's research shows that over the past 20 years, the S&P 500 index averaged 10% annual returns, but individual investors only earned 4%. That means they single-handedly destroyed 60% of the profits the market delivered. Why? Because they always buy when prices are high and sell when prices are low. They FOMO when markets peak, panic when markets crash. That's exactly the stupidity tax they pay for FOMO psychology. If you've ever bought GameStop at $200, bought Dogecoin at its peak, or held tech stocks from 2021 until now, then you're a victim of FOMO. And this isn't your fault. It's because you haven't understood the true nature of this game. After watching this video, you'll understand why FOMO is so powerful, who's exploiting this fear of yours, and most importantly, how to turn FOMO from enemy to friend in your investment journey. First, let's understand one thing clearly. FOMO isn't a sign of weakness or stupidity. It's a survival mechanism that evolution has hardwired into the human brain over millions of years. Imagine our ancestors living in hunter-gatherer times. When they saw the neighboring tribe chasing a herd of wild animals, if they didn't keep up, they'd starve. Those with strong fear of missing out psychology had higher survival chances. But that was then. Now, this same instinct has become the demon destroying your investment account. When you see a stock rise 20% in one day, your brain releases dopamine, the chemical that creates euphoric feelings. At the same time, the amygdala, your brain's fear center, starts sounding alarms. You'll be poor forever if you don't buy now. This is exactly why you can be very rational in daily life, but go crazy when you see Bitcoin rise from $20,000 to $60,000 in a few weeks. FOMO has three main forms that kill investors. First is trend FOMO. Everyone's buying AI, I have to buy too. In 2021, everyone rushed to buy tech stocks. In 2020, everyone FOMO'd into NFTs and metaverse. In 2023, everyone raced to buy AI stocks. Second is timing FOMO. If I don't buy today, I'll miss out tomorrow. See a stock rise 3 days straight and feel you must buy immediately. Hear insider information and jump in without thinking. See friends bragging about profits and want to follow immediately. Third is social FOMO. My friends are all rich now. What about me? Comparing with people showing off on social media, pressure from supposedly successful investor friend groups, feeling inferior when not participating. Do you know why sheep always move in herds? Because when facing danger, they believe following the majority will be safer. But in reality, an entire flock of sheep can all jump off a cliff together. That's exactly what your markets every day. Solomon Ash's famous experiment proved 75% of people are willing to deny obvious truth just to not differ from the majority. In the experiment, Ash showed a group of people 3 lines of clearly different lengths. But when the actors in the group deliberately chose the wrong answer, the real test subject also followed the majority in choosing wrong. In investing, this phenomenon is even more terrifying because money involves powerful emotions, fear and greed. Let's look at classic examples of herd mentality. The dot-com bubble of 2000. Everyone believed this time is different with the internet. Companies with no profits were valued at billions of dollars. Result, NASDAQ lost 80% of its value. The 2008 financial crisis. Everyone believed real estate never goes down. Banks lent money without requiring proof of income. Result, millions of people lost their homes. The GameStop frenzy of 2021. Reddit, Wall Street bets created the Ape Together Strong movement. People bought not for value, but for solidarity. Result, the stock went from $400 back to $20. Why is herd mentality so powerful? First is confirmation bias. We only seek information that confirms our views. If you believe Bitcoin will hit $1 million, you only read positive news. If you believe a stock will rise, you only listen to optimistic opinions. Second is anchoring effect. Human psychology always relies on the first piece of information. Here, Bitcoin could hit $100,000. The brain anchors to this number. See a stock once reached $100. Believe it will return to that level. Third is fear of regret. Fear of missing out is stronger than fear of losing money. Research shows the pain of losing $1 is twice the joy of gaining $1, but the pain of missing opportunities is stronger than the pain of losing money. If FOMO is the disease, then social media is the super virus spreading this disease at light speed. In the past, to experience FOMO, you had to go to investment clubs, read financial newspapers, or listen to friends talk. Now, FOMO attacks you 24/7 through the phone in your pocket. Main FOMO channels on social media include TikTok and YouTube Shorts, with videos about making $1 million in one day, 18-year-old financial gurus showing off supercars, rags to riches stories in 30 seconds. Facebook and Instagram with friends bragging about portfolio growth, ads for divine investment secrets, images of luxurious lifestyles from successful traders. Twitter with stock calls from influencers, threads about once-in-a-millennium investment opportunities, rumors and inside information. Telegram and Discord with VIP investment signal groups, pump and dump groups, extremely strong FOMO group psychology. Facebook's research shows the more time users spend on social media, the more unhappy they feel with their lives. Why? Because they're always comparing their behind the scenes with others' highlight reels. On social media, you see friend A bragging about 200% gains from crypto, friend B bragging about buying a house from stock investments, friend C bragging about early retirement thanks to trading. You don't see that friend A once lost 80% of their account last year. Friend B is drowning in debt to have investment money. Friend C is actually working another job, just bragging to sell courses. Social media platforms aren't free. Their main product is your attention. And nothing attracts attention like FOMO. The algorithm works like this. Behavior tracking. The algorithm knows you're interested in investing, pushing stimulating content, constantly showing overnight success stories, creating addiction loops. The more you watch, the more you want to watch, amplifying emotions. The algorithm prioritizes content that triggers strong emotions. Result? You live in an information bubble filled only with positive investment news, making FOMO increasingly powerful. A concerning phenomenon is happening. Thousands of financial influencers with no credentials, no real experience, but millions of followers. Their business model includes creating FOMO content to attract followers, selling get-rich-quick courses, receiving advertising money from trading platforms, shilling projects for kickbacks. Why are they dangerous? They bear no legal responsibility for investment advice. Their goal is engagement, not real education. They create unrealistic expectations about investment returns. Remember this: if they really make as much money from investing as they claim, why do they need to sell courses? Financial markets don't just move according to economic logic, but also according to human emotional cycles. And FOMO is the main driver of this cycle. The cycle starts with skepticism. Markets just experienced a crash, negative news dominates, investors are hesitant and afraid to buy. In reality, this is the best time to invest. Next is cautious optimism. Some positive signs appear. Professional investors start buying. Media remains cautious. FOMO level low. Then comes optimism. Prices rise steadily for months. Increasingly positive news. Individual investors start paying attention. FOMO level medium. After that is excitement. Prices rise quickly. Everyone makes money. Media constantly reports on markets. Friends start discussing investing. FOMO level high. Then comes euphoria. This time is different. Everyone believes. Prices rise frantically. Logic gets thrown out the window. Even the vegetable vendor recommends buying stocks. FOMO level extremely high. In reality, this is when you should sell. Next is anxiety. Prices start declining slightly. Everyone still believes this is just technical correction. Doubt begins to appear. FOMO transforms into fear of selling out. Then denial. Prices drop significantly, but people still won't sell. Diamond hands, holding stocks to death, finding every way to justify decisions. Psychology of I can't sell at a loss. Finally, panic. Prices collapse. Everyone wants to escape widespread selling. This is reverse FOMO, fear of losing everything, so selling at a loss. Let's look at a real example of Bitcoin's FOMO cycle. In 2017, Bitcoin went from $1,000 to $20,000. FOMO peaked when price neared $20,000. Everyone thought Bitcoin would hit $100,000. Result, price crashed to $3,200 in 2018. From 2020 to 2021, Bitcoin went from $3,000 to $67,000. Tesla, MicroStrategy, institutional investment funds bought in. FOMO peaked when Elon Musk tweeted about Bitcoin. Result, price went from $67,000 to $15,000. Lesson, when FOMO peaks, that's when markets prepare to reverse. How to fight FOMO. Before fighting FOMO, you need to recognize you're experiencing FOMO. Low-level FOMO signs include frequently checking stock crypto prices, comparing portfolio with friends, feeling restless when not participating in markets. Action. Stop. Breathe deeply. Review investment policy statement. Medium-level FOMO signs include buying stocks because you see them rising strongly, constantly changing investment strategies, increasing risk ratio after seeing others profit big. Action. Stop all investment activities for 24 hours. Talk with mentor or friends. High-level FOMO signs include borrowing money to invest, ignoring research and buying on emotion, losing sleep due to investment anxiety. Dangerous level FOMO signs include going all in on one stock crypto, using high-margin leverage, quitting job to focus on trading. Action. Stop. Cease all investment decisions. Seek professional consultation. The most important principle is building systems, not relying on emotions. Create an investment policy statement. Write clearly about your investment goals, like buying a house, retirement, investment time frame like 5 years, 10 years, 20 years, risk tolerance, maximum percentage loss you can handle, asset allocation, what percentage stocks, bonds, cash. Rule, all investment decisions must follow IPS. If it doesn't fit IPS, reject immediately. Apply dollar cost averaging. Instead of buying a large amount once, break it into regular purchases. Example, instead of buying $100,000 in stocks immediately, buy $10,000 monthly for 10 months. Benefit, minimizes impact of emotions and market volatility. Periodic rebalancing, every 6 months or year, return portfolio to original ratio. Example, if target is 70% stocks, 30% bonds, sell excess of what's risen too much, buy more of what's declined. Effect, automatically sell high, buy low. Managing information sources is also very important. Unfollow accounts that only post FOMO content, leave investment signal, and get rich quick groups. Limit watching YouTube channels about trading and crypto hype. Create an information diet. Follow maximum 3 to 5 reputable investment sources. Read market news maximum once daily. Focus on long-term analysis, not short-term rumors. Apply the 48-hour rule. Before making any investment decision, wait minimum 48 hours. During this time, research thoroughly and ask yourself, am I FOMOing? If after 48 hours it still seems reasonable, then act. Train your psychology by spending 15 minutes daily meditating or deep breathing. Practice observing emotions without reacting immediately. Write an investment journal. Record reasons for buying, selling each stock. Record emotions when making decisions. Review after 3 to 6 months to learn from mistakes. Practice pre-mortem. Before investing, imagine worst-case scenario. If this stock drops 50%, how will I feel? Do I have sufficient financial and mental capacity to endure? Create a safety net by always keeping 6 to 12 months of living expenses in cash. Never touch this money for investing. Purpose, create sense of security. Reduce pressure to make money fast. True diversification, don't put all eggs in one basket. Invest across multiple sectors, countries, asset types. Principle, no single stock should occupy more than 10% of portfolio. Position sizing, predetermine each stock crypto should occupy maximum X% of portfolio. For high-risk stocks, maximum 1-2%. For reputable ETFs, can go up to 20 to 30%. Instead of FOMOing when markets rise, FOMO when markets fall. Create a wish list of stocks you want to own. Set desired prices for each stock, 20 to 30% below current price. When markets crash and prices reach these levels, FOMO into buying immediately. Mindset, this is a once-in-a-millennium opportunity to buy cheap. Real example, March 2020, COVID made markets crash 30%. Smart FOMO people bought Apple at $80. Now it's $180. Regular FOMO people panic sold. Instead of FOMOing into hot stocks, FOMO into learning. Channel FOMO energy into reading investment books like Warren Buffett, Peter Lynch, Benjamin Graham, learning financial analysis, reading corporate reports, understanding macroeconomics, economic cycles, studying market history, past crises. New mindset. I'm afraid of missing the opportunity to become a good investor. Every day not learning is a wasted day. Knowledge is an asset that cannot be lost. Turn FOMO into motivation to build solid investment processes. Checklist before each investment decision. Do I understand what this company does? Do I believe in long-term prospects? Is current price reasonable compared to intrinsic value? Does this stock fit overall strategy? Am I FOMOing? If any answer is no or not sure, don't buy. Warren Buffett said, the stock market is a machine for transferring money from the impatient to the patient. Set goals to hold stocks minimum 5 years. Focus on building wealth, not making quick money. Celebrate long-term milestones instead of short-term profits. Create a personal alert system with level 1, yellow alert. I'm thinking about buying stocks because I see them rising. I feel restless when not participating in markets. I'm starting to compare portfolio with others. Action. Stop. Breathe deeply. Review IPS. Level 2, orange alert. I want to change investment strategy because I see others succeeding. I'm considering increasing risk ratio. I'm starting to research hot stocks. Action. Stop all investment activities for 24 hours. Talk with mentor friends. Level 3, red alert. I'm considering borrowing money to invest. I want to go all in on one opportunity. I feel this time is different. Action. Stop. Cease all investment decisions. Seek professional consultation. Whenever feeling FOMO, write in FOMO journal with template. Date, time. When FOMO occurred. Trigger. What caused my FOMO, like news, friends, social media. Emotions. How do I feel, like excited, anxious, eager? Thoughts. What thoughts are running through my head? Desired action. What do I want to do? Reflection after 48 hours. Was that decision right? What did I learn? Apply the 5-5-5 rule. Before making any investment decision, ask yourself how this decision will affect me after 5 minutes, after 5 months, after 5 years. Example, after 5 minutes, feel excited about joining the game. After 5 months, might lose money if buying at wrong time. After 5 years, if it's a good company, might profit. If it's a bubble, will lose money. Only invest when the 5 years answer is positive. Dedicate a small portion of portfolio, maximum 5%, for FOMO investments. How it works. 95% of portfolio follows long-term conservative strategy. Remaining 5% for playing with hot stocks, crypto. When you lose all of this 5%, stop. Don't add more. Benefits. Satisfies FOMO needs without destroying main portfolio. Learn from mistakes at low cost. Chance for high returns if lucky. Find a like-minded investment friend as accountability partner. Share investment strategies with each other. Report regularly on portfolio and decisions. Remind when the other shows FOMO signs. Learn and grow together. Rule: before making major investment decisions, must discuss with partner. Look at the mindset of successful investors. Warren Buffett, king of patience, said, "Time is the friend of good businesses and enemy of bad businesses." Never FOMO. Always invest with long-term mindset, delighted when markets fall because there's opportunity to buy cheap. Peter Lynch, fighting crowd psychology. Sell when everyone buys, buy when everyone sells. Research companies thoroughly rather than listen to rumors. Trust process, not emotions. Charlie Munger, art of avoiding mistakes. Successful investing isn't about doing what's right, but about avoiding doing wrong. Advice: invert, always invert. Think backwards. Instead of asking how to succeed, ask how to avoid failure. Useful mental models include circle of competence. Only invest in fields you understand well. Don't FOMO into unfamiliar industries, companies. Continuously expand your knowledge circle systematically. Margin of safety. Always buy at prices below company's intrinsic value. Create safety buffer for when estimates are wrong. Mindset: I'd rather miss opportunities than lose money. Anti-fragility, according to Nassim Taleb. Build portfolio that can benefit from volatility. 1 part conservative 80%, 1 part high risk with big potential 20%. Avoid middle risk, moderate risk, but not high returns. Now you understand the truth about FOMO. It's not a sign of weakness, but a survival instinct programmed into our brains from millions of years of evolution. The most important things to remember: FOMO is investors' enemy number one. It makes you buy high, sell low, exactly opposite to basic principles of successful investing. Social media amplifies FOMO 1,000-fold. Algorithms are designed to exploit your emotions, not help you invest better. Herd mentality is very powerful. 75% of people will deny truth to follow the majority. In investing, this can devastate your finances. Have systems and clear processes. Investment success doesn't come from inspiration or luck, but from consistently following processes. Turn FOMO into positive tool. Instead of FOMOing into hot stocks, FOMO into learning, building processes, and patience. Specific actions for you this week. Write your own investment policy statement. Unfollow accounts that create FOMO journal, and start recording. This month, set up DCA system for regular investments. Find an accountability partner. Read at least one investment book from successful investors. This quarter, review and rebalance portfolio according to IPS, build adequate emergency fund, practice pre-mortem for all investment decisions. Remember, in investing, doing nothing is often better than doing wrong. Warren Buffett said, "One of the hardest things in investing is sitting still." Markets will always have new opportunities, new hot stocks, new get-rich-quick schemes. But you don't need to participate in everything. In fact, participating too much is exactly what causes most investors to fail. Success in investing isn't about making the most money fastest, but about building wealth sustainably over time. FOMO will always exist. But now, instead of letting it control you, you have tools to control it. The story ends here, but your investment journey is just beginning. If this video helps you understand FOMO better and how to control it, please like and share to help more people escape this psychological trap. Don't let FOMO continue killing innocent investment accounts. And remember to subscribe to not miss upcoming videos about investment psychology and building sustainable wealth. This time, FOMO into becoming a smart investor. That's the only FOMO worth having.